Welcome to Machine Minds, where technology and humanity meet. I'm your host, Greg Tarusian, founder of Samson Rose, a recruiting and search business focused on the robotics and AI industries. The Machine Minds show is where we dive deep into the intricate world of robotics and artificial intelligence. As a staffing industry leader with a passion for the frontiers of technology, I'm pleased to be bringing you intimate conversations with the founders, investors, and trailblazers who are at the heart of the AI and robotics revolution. In each episode, we dig into their journeys, the applications of the products they're working on, and the breakthroughs that are shaping our future. Join us as we explore how these machine minds are transforming the way we live, work, and understand our world. Whether you're an entrepreneur, a tech enthusiast, or just curious about this amazing field, you'll learn something new with each episode. Let's delve into the extraordinary. Let's delve into machine minds. Hello and welcome to Machine Minds. I'm your host, Greg Tarusian, founder of Samson Rose, your robotics talent search partner. And on today's episode, I'm joined by Abdo John Hajj, managing partner at Type 1 Ventures. Thanks for being on the show today, Abdo.
Thank you for having me, Greg. Really appreciate it. It's going to be awesome.
Yeah, it is. It's my pleasure. Let's jump into it. So I'm excited for this one. As we get through this, people are going to have a lot of recognition to the companies that you guys have been involved with or your investments. But can you start by telling us a bit about your background before Type 1 Ventures?
Yeah, definitely. It's kind of I'd say it's pretty unorthodox. I grew up in LA. Both my parents are Lebanese immigrants. We kind of spent my childhood really just focusing on just enjoying the LA suburban life, right? Then I got into university at the University of Southern California. So I went to USC. My dad was sick, so I didn't really want to leave town. I wanted to be as close as possible. And when I was there, my roommate at the time was a creative. He was like a film student. And one of the obvious questions we would going down the path of talking to each other and getting to learn about his major versus my major. And I was studying like a interdisciplinary arts, like liberal arts practice at Thornslife. It was called narrative studies. I don't even know if the program exists anymore. But the idea was he was doing a bunch of really creative stuff, but he was going to the film school, and there was all this like regulation in the film school and all this like really interesting red tape around what he can make and what he can't make. And my thought was like, what the hell is why does this exist? You're a filmmaker. You got to be like making really cool stuff. So like, let's find a way to make cool stuff. And so we got together and we started making like really crazy, like VFX, like production, content. And we started off with like leveraging his like VFX skills and like a lot of stock footage on the internet, and making these like crazy montages, doing snippets of ourselves. And my job was essentially to pick up the phone and just start calling all the major record labels. And that quickly grew into them trusting us over time. We built a business that essentially worked on behalf of like the largest brands and largest record labels in the world. We did everything from music video to product placement integration. And then we got really kind of creative on how to build out the infrastructure for that. And we started thinking about, okay, how do we build a better business development tool, which ended up turning into more of like a marketplace for product placement. That's when, the entrepreneurs, and both of us really, he's still an entrepreneur. He's building an amazing company called Megaton now. But that's where that kind of excitement around being a founder and building a company came. In 2014, I was approached by a private equity group to acquire the business. And, as much as I had fun doing it, it was a learning experience. I don't think entertainment, product placement was ever like my life's calling. So I made a decision to kind of exit that completely, did a deal with my partner at the time. And I kind of spent the next year traveling. So I was 23, 24 when we sold it. And the idea for me was to really just go out and see the world and do whatever I can. So spent a lot of time in different places, the Middle East, Latin America, Asia, Southeast Asia specifically, and was able to do that for a year. And then the guys who bought me out essentially came back to me and said, hey, would you be interested in working in private equity? And that was where I was like, wait a minute, you guys bought a business from me, probably made more money on it than I did. And
and now you're giving me a job.
you're giving me a job. Which, by the way, the way I was managing finances at the time, that was not much needed.
Yeah, I bet at that age, exiting a company and traveling the world, you're probably just
exactly that led to a lot of things. So it was super informative, and the next couple of years were some of the most informative years in terms of business. I realized that there's a small industry called private equity that not so many people actually get the privilege of working in, that own 85% of businesses globally. And that was like a really crazy idea to me, because the only exposure I had to business up until that point was just this idea that you start a business. It was very actually Lebanese, which is like a trades business, right? And that's like, how we think there, generalizing obviously. But the idea was, we'll create as much, we'll create businesses, and you just make them, you build a product, you sell that product to somebody. And fundamentally, business still is that, but it was a lot more different to get more into the sophisticated financing aspect of it. But over time, and I worked for some pretty big firms. I was exposed to working with HIG Capital, working with some of the largest family offices. I'll spare names for obvious reasons. But and doing that, I started to get really exposed to the inbound of venture. Right. It was just like general partners of some of these large firms coming out to us as a family office and saying, hey, we'd love to court you and see if you're interested in alternative assets. So I was tasked by one of the families to really focus on alternative investing. And we did a combination of direct and invested in a few managers at the time. Doing that asset allocation was when I think I realized that like private equity is not the culture for me. It was very value extraction. Great strategy if you're trying to make money, right? But for me, it was like most of the time when I was evaluating these businesses, whether I was looking at a midstream oil company in Arkansas or like looking at like an industrial waste management company, all I could think about to myself was like, some technology out there has completely just wiped this off the face of the earth. Like there's something out there that's just going to make this so obsolete. Whether that's robotics, AI, or whatever it is, like there's something that someone's building somewhere that's going to make this like not a valuable business. And me being so young in my career was like, there's no way this is sustainable for me, right? In the overall culture of private equity to me was like, you buy a business, you consolidate, you buy up other businesses or competitors, and you sell it to someone at a 40-50% premium than what you bought it for. And there's just a code in that industry that everyone's okay with, and that's cool. And that's, they live great lives. For me, I just wanted to invest in the most disruptive stuff. I wanted to literally pinpoint all the industries I was exposed to through private equity and say, how do we disrupt all of this? How do we just take the most industrial businesses and reimagine how these things can shape form? And so when I started dabbling into deep tech, I was working with a firm called Outlander Labs, a guy named Paige Craig, who fantastic investor, great track record, learned a lot from Paige. And that's when I met Tarek here at Type One. And Tarek at the time was a super small outfit. It was less than 5 million in AUM. Like it was him and his buddy, Daniil, who like stood up the company. He was going through some partnership transitions. And I think the idea was like, I had invested in SpaceX. I became super fascinated in SpaceX around 2018, 2019.
Was that prior to joining Type One?
That was prior to joining Type One.
Okay.
And so I was able to get a little exposure to the company, and in that just geeking out, right? Realizing that here's like this massive industrial revolution where, you have convergence of all these unique technologies, whether you want to call it AI, robotics, whatever, that are creating these magnum sized projects, right? Like building a starship to go to Mars, right? That's a crazy ambitious project. And for me, I saw it more like, this is like the beginning of like a transatlantic railroad, right? This is like in every major historical moment where mobility breakthroughs occurred, there was just this outpour of not only wealth, but innovation that flowed out of it, right? And with crazy innovation comes crazy wealth. And for me, it's like obvious to align yourself. If you're a technology investor, it's obvious to align yourself with that kind of that momentum. And so that's where space became really relevant to me. That's where Tarek reached out to me here in LA. We got together and immediately we clicked. We're like ambitious guys. We don't really need to work for, we don't need to really work for like instant gratification or instant outcome. We could build a vision together. And so we got together and we started building the firm. Now we're I think the AUM number is changing daily, but I think we're at $500 million. Our goal is to get to $1 billion in AUM by the end of the year. I would say we're probably one of the fastest growing firms in LA. We've only been around for a couple of years and we've managed to grow AUM pretty significantly. We're vision oriented. So the way that Type 1 really kind of positions ourselves and really like the essence of who we are, it's like we're based off the Kardashev scale. I don't know are you familiar with the Kardashev scale?
No, you know what? I was reading on it about it on your website, but I wasn't prior to that. Yeah. So if you could share that with the audience, that would be great.
Yeah. And sci-fi nerds will get it right away because they understand like what a Type 1 civilization, Type 2 civilization, Type 3 civilization, Type 3 civilization actually means. But the Kardashev scale was essentially created by Dr. Nikolai Kardashev. And the idea behind it was, how do we create a mathematical equation that allows us to identify technological advancement in society? And so what he was able to do is essentially like quantify that, right? And right now where we sit is closer to like a 0.73 civilization. And the idea is that over the next, our belief is over the next 100 years plus, we're going to get to a Type 1 civilization. And what does that mean, right? That means like extracting a lot of the sun's energy and using it here sustainably, controlling it really. And then the second meaning that we've kind of, squeezed out of it was we want to become interplanetary to do that, right? And so for us, the way we position ourselves as a firm, we're essentially, we have a great early stage discretionary funds, but we have multi-stage strategy as well. And the idea is that we're going to invest in the companies over the next 5 to 10 years that are going to be integral and building the infrastructure, building the technologies needed to overarchingly get to that vision, to achieving a Type 1 civilization. So we deconstruct that 100-year vision and we piecemeal it. And what we realize is like by doing that, it creates an immense amount of creativity in our strategy and how we like approach investing. And it allows us to reward our investors as well from fiduciary duty to make sure that they're kind of benefiting from the appreciation of all these technologies as well. So it's married itself really well. I think it's resonating really well with a lot of, we're a growing firm, we're emerging. A lot of mistakes have been made. We'll continue to learn from those. But I think from my perspective, it's resonating really well and investors are really starting to get behind what we're doing. So it's exciting to see. Not to mention the exposure to all the awesome companies that we get to be involved with. And the excitement they have by just our sci-fi geekiness, right?
I guess that aligns really well. Yeah. Can you explain Type 1 Ventures investment thesis and kind of what sets you guys apart? And I know you kind of touched on it there because that's unique what you just mentioned about the value that you're creating and letting your investors receive as you go on to further stages. But can you give more context onto that for the audience?
Yeah, I'll get like a little deeper into like just how we see it from a strategy perspective. But like I said, the overarching theme is like building a Type 1 civilization. And when Tarek and I got together and Sanjeev and all our partners got together, it was like this idea that we would kind of build a firm that's generational and that it's going to precede our ability. So what that means is that you're not going to be able to take the same strategy over the next 20 years and apply it, every single time. But if you have an overarching vision, that could guide what your ultimate goal is to what is important right now, right? You just piecemeal it. So for us right now, it's really deep tech focused, right? And I think it will continue to be deep tech, but we'll get into this probably later at some point. But deep tech is a ever evolving term. And right now, something in 20 years from now won't just like it meant something else differently 20 years ago. But for us, the idea is that we have discretionary early stage funds, right? So our next fund is $300 million. It's focused on pre-seed to Series A, investments. And these are blind pooled. We're able to make decisions on our own. All like it's really focused on just being able to underwrite these businesses from a technical perspective. I would say like 40 to 50% this time of year is really space tech focused. We're not really investing in like the first layer of infrastructure, meaning we're not investing in rocket companies, even though you'll see on our portfolio SpaceX and all the companies we have invested in. What we're really focusing on is like, we're making a bet. And this was actually coined by Tarek, which I had a lot of appreciation for when I was partnering with them, was if you're going to bet on space right now in this era, are you going to bet on existing infrastructure? Or are you going to bet on where that infrastructure is going to evolve to? And his idea is that we can't make bets assuming Falcon Heavy is the largest, payload up to space. We have to make bets that Starship's going to succeed. So we're investing in the companies at the earliest stages in the space companies that are going to leverage Starship's capabilities for payload capacity and build off of that. So you'll see in our portfolio, infant module like Gravityx, which is like a space station module, right? A component for space stations that could build modularly in space. And, our thesis there is that you could fit that into one payload and send it up to space. So instead of building how you traditionally had to build space stations, you would do it through, inflatable modules, which was creative at the time because that's where legacy flight systems would allow you to get to, right? That was like their limitation there. So now that we know that these limitations are kind of breaking with Starship and hopefully additional, innovations around flying, we know that there's like a huge opportunity to capture infrastructure. So we're doing infrastructure in space manufacturing. We're doing a lot in lunar. We're thinking about how that evolves. We're looking at core technologies that we think will overall bring, unit economics down for transport in space. So we're thinking about a lot of, unique strategies within that. And I would say that makes up 40 to 50% of our time right now. And then the other, 50% of our time is looking at our existing legacy systems here on Earth, right? And thinking about like all these industries that could be reimagined, right? There's a really unique point in time right now where you're seeing a convergence of all these technologies. And we're investing in like full stack hardware software businesses that are like aiming to be category leaders, whether that's heavily exposed to novelty, IP, and computation, whether that's robotics, whether that's, overarchingly just industrial automation, like thinking about how things have been done for the past 100 years of industrialization to what that looks like now. So yeah, that's kind of what we call the deep tech category. And then we have a small focus on biotech and longevity because we think that, human performance in space, the longer we live, the more traveling to Mars doesn't look as crazy, right? 9 months or whatever it takes to get there. So then we're thinking about a lot of those things. And like I said, there will be years where we maybe invest in one or two space companies because that aligns with the overarching vision. And there's maybe some years where, where we're AI heavy, which I would say last year was very AI heavy. And then there's other years where we're going to probably do 100% space, That's because we believe there's some momentum there and we should be focusing on these. So it allows us to kind of adjust based off the vision. I don't know if that was helpful. Was that helpful?
Yeah, no, that's great. That's great. It gives more context into like the thesis because, some firms are just like squarely focusing like, hey, we just do manufacturing, just do logistics or whatever it is. But it sounds like you're kind of fluid within the deep tech space. Not space, but you know what I mean. When you're looking at investments, when you're evaluating investments, are there key factors or criteria that you consider most critical?
Absolutely. I mean, like it depends what we're specifically doing, right? In space, when you're thinking about the space tech industries, it's really like you got to understand like what policy, like what's driving policy, subsidies, right? These are capital intensive businesses. These are like incredibly dynamic in terms of, commercial industry, like how adaptation looks for those companies. So depending on the type of business in space, that requires a whole skill set that I like to think we've done a really good job at kind of figuring out. On the deep tech side, if I look at like some of my favorite investments, actually there's no favorites obviously in our portfolio, but some of my most exciting growth opportunities more recently, it really comes down to kind of what I was talking about earlier when we think about business, right? Ultimately, these are businesses, like whether they're, backed by incredibly, sophisticated IP or a large language model, small model, whatever it is that is ultimately helping them operate, that's a product and service that you're going to sell to somebody for some reason. And so when I look at, some of the most ambitious projects in our portfolio, I still emphasize a lot, like what is the solution you're creating? What do existing customers pay for that solution? And how are you beating that by magnitudes, more, right? And if they can't give me an answer of cost parity, they can't tell me how they plan on scaling manufacturing, not talking about the actual product, but actually the product that makes the product, the factory, right? If they can't tell me how the unit economics are going to make sense to the customer off the bat, right? Like if a product doesn't just come off the bat, once you've built, your capital intensity should go into building the factory or whatever you're building, right, to build the product. But if that product, once you finish, isn't at a cost parity or cheaper than existing incumbents, then I'm not interested. It's not gonna intrigue me, because I've spent many of my years trying to convince, and I have plenty of horror stories of investing in like supply chain tech and a bunch of other things that fell on its face because I never consulted a customer once in the process. And that was a big learning curve for me in deep tech specifically.
Yeah, that's like a repeated theme here on the show. Everyone with experience always talks about speak to customers first, get clarity on what they're using, what their pain points are, what they're paying, etc. Otherwise, you're just building in a vacuum.
Yeah, but honestly, like I wouldn't even say customers are reliable, right? Because you got to think about like psychological dynamics within a potential customer. If my customer is a large corporate, the procurement person on that team is like, you have to understand who they are, what their incentives are for innovation and all of those things. So like when you're making a venture bet, the way I see it is like, yeah, you could depend on like customer validity, right? And most people are going to say, and to any founder who's coming up to you saying that we're going to make we're going to make an airplane. We're going to, talking to an airplane company recently. So they're like, all right, we're going to go to, American Airlines, and we're going to make you an airplane that's 50 times cheaper, 50 times better. Of course, the person at the procurement thing is like, great, show me the plane. Does it pass all the regulations? Like, great, show me the plane. And then the other part of that is, are they going to adopt it? Are they going to risk their own job? Are they going to risk that budget? Like, what are the dynamics of that individual? So customers are one way of thinking about it. I think about it of like, if this company didn't get any customers, but just had this superior of a product, how category defining is that product? And how is that actually going to shape the overall outcome of the system or the industry itself? Right. And I look for companies that define themselves within just their capabilities. And I know that customers will adopt, but no matter what, it's going to be pulling teeth to get customers to adopt. I don't care.
Yeah, for sure. Especially in big industries like that are, I guess archaic might not be the right word, but it could be in some of those ways. They're just stuck in their way. It's hard to switch your whole supply chain or your whole technology, manufacturing technology, your whole way of doing things that's been done for decades for a bet in some respects. One thing that I've heard, a lot of people are like, oh, we need to go out and get LOIs before we go and raise capital, before we talk and all of that stuff. And the other aspect has been obviously that as well isn't reliable. So some startups that I've worked with have been saying, we're going through the whole procurement process. We want an actual deposit, even if it's minimal, to speak to all the stakeholders, figure out what purchasing actually looks like, and get some sort of financial commitment before we consider it an LOI. Does that carry more weight in your opinion?
I see it two ways, right? Like on one hand, it's like super exciting when all these like startups pitch me and they're like, oh, we're talking with AWS or we're talking with Google or we're talking with like one of the big like hyperscalers, call them. I don't always see that as a value add, right? I also think that like so many times in any business. And I remember talking to, this goes back to my film school days, right? When I was like talking to filmmakers, a lot of them were just so eager to like talk to Steven Spielberg. Like, I want to talk to Steven Spielberg, but what they were doing is they were focusing too much on like where they want to be versus actually understanding like the resources around them. And I'm like, well, why are we always looking up sometimes? Sometimes we just got to look around us and the answers are there. And what I mean by that when it comes to venture is that like there's so many times where you don't actually have to go to the hyperscaler to prove that you're a valuable product. In fact, you could go to the more regional players, or you could go to the more like local players, and you could start providing that service to them and see how that scales their business, right? And then suddenly you create a competition in the market where the hyperscalers have no option but to work with you. I mean, you could see it with what happened with ChatGPT, right? Now, Apple's adopting, right? Now, Microsoft, I mean, was ahead of the curve there, but you know, these are all folks that are like, there's no way we're going to beat this at this point, right? Like, this is a revolution that's happening, and you know, Sam and his ability to handle product the way that he has is incredible. And there's just, they're just going to continue to define the AI category and continue to look at like how to build a better language model that everyone can use. And over time, there's no question about adoption. And so I think back to that original question, is an LOI is useful, but like don't always look at hyperscalers as your solution, right? Look at whether, you know, and this is just a general venture advice, right? Whether it's your early adopter consumer product, you're doing a consumer product, you're just trying to early adopt with a bunch of people, go to the people that this matters to right now, that are a little more flexible and nimble in their ability to adopt something like this, and just try it, master it. And once it's mastered, then you have a value proposition to the hyperscalers that they can't reject, right? If your product is that category defining, right?
That makes sense. That's great advice. So you've invested in some well-known companies. Obviously, you touched on a couple there. Can you share examples of any that stood out during this evaluation process and why?
Yeah, I mean, like a lot of people associate us with like the big names, right? OpenAI, we've invested directly there. We've done Anthropic. We've done a lot of these like big companies. You know, my real, like, if we're talking like real, you know, lifting up the hood of the type 1 trunk and trying to show you guys a little bit more about our strategy, like a lot of that is more informative. We love the companies. We know that there's a huge bunch of value for our investors to do it, but a lot of what that does, it helps me understand the hardware needs for these companies over time, right? And so when I look at OpenAI, for example, here you have like an anomaly company that builds out what is like a search engine computer language model that's on crack, right? And suddenly everyone's like hyper adoption happens, right? That's an anomaly scenario. That doesn't happen very often, right? And for us, it was like, wow, what an incredible innovation. Like, product is there, everything's there, team is incredible, excited, we're going to support that. But the other thing that is important for us is like, hey, this creates a whole bunch of supply and demand dynamics that didn't exist prior to the adoption of large language models. So let's peel the onion back, right? Let's understand, if this is the way the world is going, if OpenAI, you know, if ChatGPT, if Claude, if Llama, this is the way the world is going, then what does that mean for compute, right? Okay, great. Now we see like huge market hype around NVIDIA. Well, okay, what does that mean specifically for that, right? And then we kind of say, okay, well, that leads us that there's huge demand in compute. Well, what is the biggest bottleneck for compute? It's ultimately hardware. Well, what's that? Semiconductor. Okay, what's that? Then that's energy efficiency. And then what is that? That means energy alternatives. So these, like, we have to understand, okay, what is the year-over-year growth for a large language model, right? That's what we learn, you know, these investments. We market map those, and then we say, okay, how does this inform our early stage decision-making when we think about technological evolution in deep tech, right? How do we take the findings there to inform our early stage team on how to continue to, you know, this is the evolution of this industry. Let's make informed decisions that way. And being so close to the ground with founders at all stages, I think, is ultimately the best strategy in venture right now. Because right now, people, it's too often you see yourselves in a situation where you could only invest or support a founder to a certain area, to a certain point, and then the buck stops there for you, and you're just depending on someone else for the outcome. And for us, it's like we want to take founders the whole way. But to answer your big company right now, one of the problems that I was doing a bunch of renovation on a house, on a place, building it out, doing a bunch of stuff. And one of the biggest problems that I realized in this process was time and construction and how miserable that was. And then it got me thinking, like, damn, this is painful, right? It takes a toll on everything in your life when you're just trying to build a house for yourself. And, in the middle of doing this, I'm like, working with the efficiency of AI companies and looking at all these things. And my mind just went to like, wait a minute, why is this a problem still? Why hasn't like construction been figured out? Like, why can't we build houses better? Then I started to really deep dive into all the companies that are creating these like unique solutions, right? Whether it was like 3D homes or 3D printed homes or modular solutions and all this stuff. And eventually a friend, Tyler, comes up to me and he says, hey, take a look at this company called Kubi Technologies. Yeah. And it was these two guys, Oleg and Alex, who were like, hey, the solution to building better infrastructures or better real estate is to build micro factories regionally and deploy these factories all over and then build, homes for the masses. And I was like, interesting. I've never heard that. I've heard build a factory to 3D print home, take the thing and then frame the house and then still work with traditional suppliers to get the rest of the home. These guys were like, no, we're going to consolidate all the raw material into a single factory, right? We're going to scalably manufacture these factories, launch 275 of them all over the United States. And then we're going to be able to deliver homes within 100 to 300 miles. And we're going to build a home a day, right? And you're just like, whoa, how does that even work? And then that itself is such a unique, like that's a unique vision. So that intrigued me like crazy. Then I started to dig into the amount of engineers. These guys spent over at this point, 400,000 engineering hours doing this. And Oleg is such a brilliant engineer. That's how he measures engineering tasks. He's like, how many hours is this going to take? And these guys with, just $7 million were able to build multiple factory iterations. They were able to build 10 different different styles. They are just one of the most incredible companies I've seen, and we've continued to support them. So, for the obvious reasons, real estate is a huge problem. And it goes back to my original saying of like, earlier in this conversation of like saying, we look for full stack software hardware businesses, people that are taking an existing industry and reimagining the systems in which they're being built, right? It's like what Elon did with Tesla. He said something really funny back in the day. He's like, if I was doing Tesla for money, I wouldn't have been building a car manufacturer, right? Like that's not what you do that for. But what he saw is an opportunity to build, a sustainable car with incredible, unit economics over time by just building out the factories. So this company is essentially doing something very similar where they're saying, hey, the product is the factory, the byproduct are homes. And if you keep core to that strategy and deploy all around the US, you're going to do that more efficiently. And they were able to drop engineering costs by outsourcing to different countries and doing like a lot of creative things to build this business, which if you tried to build it here in the United States alone, it cost you hundreds of millions of dollars. And we're rolling out 2 factories in the United States. We're finishing up building the first home in the United States in Detroit. And this is one of those companies where you're just going to see just suddenly overnight, just everywhere, right? It's just going to be, you're seeing Kubi homes being built. And the beauty of that is like, no one wants the home to look the same. And these guys have that capability of like, just your home could look the way you want it, to the preference you want it. All the materials are incredibly, unique in the sense that they're stronger and better. And they're going for this really like, affordable luxury. Like everyone deserves a really nice home. And and deserves to afford it. And because of the bloat and inefficiency in construction to date, you haven't been able to capture that. And, people all over the world are struggling to buy themselves homes. So
yeah, it's crazy at the moment, isn't it?
I mean,
that's amazing.
We're in California, so we know the pain.
I know. Yeah, I was having that conversation recently. I'm like, how do people afford their first home, right? Like, if you're in your 20s or even 30s, and you're like, the amount you need to have for a down payment, if you don't have help from family or like a nest egg or whatever, it's just crazy, especially with the interest rates right now as well. So
yeah, I was privileged.
feel for people.
The fact that I was able to enter the market in LA, combination of having family to help me, but also, selling a business and doing a bunch of other stuff I look at it like that. And those are problems I want to solve for, right? Like I realize that comes back to why I'm doing this. It's like, it's so fun to think about those problems and you don't have to it doesn't have to always be charity. It can be like, hey, you're capturing value in doing that, but you're actually changing the way things are being made, and you're helping a lot of people in the process. So I think that balance is what makes particularly what we're doing at Type 1 really exciting.
Yeah, it's the long game as well. Like you mentioned, it's not instant gratification. But what role do you guys play with your companies after you invest in them, like post-investment?
Listen, I think, I'd be lying to you if I'm saying I'm super helpful with OpenAI, right? I think that it's like one of
at this point.
Listen, I'm not like one of those investors. Like I support a lot of companies. I'm involved with a lot of companies, but I'm not like the guy that wants to be on every board, right? And I think the idea for me is like I put a term sheet in for a pretty high profile company recently, and the peoples that were leading the transaction were like, hey, are you expecting a board seat? And I'm like, no, but I just like a say in helping them find the next board member. They're like, well, that's strange. Most investors would ask for a board seat. And I said, there's already an investor there that's worried about the fiduciary duty of investors. I was like, this seat should go to someone who's going to come in at this particular time of the business and help with whatever that business needs.
Yeah.
I'm not
to the next stage. Yeah. Right.
But I'm not good with it,
That's refreshing. Yeah. A lot of VCs, like you said, they want that board seat.
That being said, we're not passive, right, whatsoever. I think it's situational, but if you ask the Kubi guys, you'll see that I'm like, I helped get the first house built in the US, right? There's like different things. I'm helping with factories. I'm helping with financing those. I'm doing a lot of, more activist roles there. My partner Tarek with Gravitics, right? In that company, he's on the board, but he's very active in helping them, get customers and do all these things. We're never going to, I never want to invest in a founder who I don't think is going to do it without me, right? Like, that's kind of like my main mindset is like, I want to feel like I'm going to miss out on that journey, right? And so I'm never going to invest knowing that I'm going to I have to do this or because otherwise it won't be successful. That's a crazy strategy. If it doesn't, we rely on our founders to be able to communicate to us what they need from us. And having that relationship with them, I think, is the thing. And not over-promising, trying our best to align our timing to make sure that we could continue to support them. And we want to support companies. Like, it's not like, it's like oftentimes it's like we want to support our companies and we want them to grow. And the more they grow, the more we can make a case to investors that we can support them. And having founders that understand our venture process is like super key, because I think it helps like have a little bit of like sympathy towards each other's processes. And I think I just really try to align myself as that partner who's going to come in for whatever they need us to come in for, whether that's finding their next board member, going around the world and lobbying for that person, or just literally helping them like in the brainstorm room. They're like, we just need a creative idea. Like, just come up to our headquarters and help me out. And I'll do that. So that's how we like to position ourselves.
Love that. That is a great stepping stone for what I wanted to ask your opinion on next. But for our founders out there, aspiring founders, what do you think is crucial when they're choosing the right investment partner? I guess some of it is dependent on the stage they're at and things like that. But like you mentioned, your next fund is seed or pre-seed to that Series A. At that stage, what do you think is important?
Yeah, I think I think it comes down to, I would even argue like it's not about a firm by firm thing, right? Like, being someone who's building, with my partners, an emerging brand in venture, we're doing a really good job. People are recognizing who we are. Um, Oftentimes that's so much of the conversation is like, oh, I know your brand. I know this, that. It's like a venture capitalistic ego dynamic. That's interesting. I think it comes down to the actual individual at those firms. I think, every single firm, whether you're in Dreessen, you're Sequoia, or wherever it is, it's going to matter so much to the founder who is particularly the person championing the deal for you. And what are those value adds? And if, over years of doing this now and understanding those dynamics, I think so much of that comes down to like, what is that person's reason for loving what you're doing in your journey so much? And I think it's really hard to give like a template response to that. I think that all of that has everything to do with the relationship you build with that partner. And I mean, it could be the firm and the resources, the wide resources of that firm are vast and they're incredible and they could walk you into XYZ door. But does that person really want to do that for you? And what do they want from you? And and they could have all the resources in the world, but if they don't champion you the way that you need to be championed, then there's no way that you're going to get that done. Like you could have a sovereign fund back you, but you could end up never doing a deal in that territory, right? Or get a single customer from that territory. So what is the give take? And I think every GP to portfolio company relationship should be a give or take, which means like there is something you are providing to that founder that is exceptionally valuable to them. And there's something that they're doing to you outside of just value creation in your portfolio that's exceptionally valuable to them. I believe in Kubi. I support these guys. I want them to help support the idea that I could be a thought leader in understanding how technology needs to develop within the real estate industry. And my investors see that I have someone that's capable of underwriting that opportunity, right? I need that support from them, right? But they need my support financially and they need my support in commercializing. So let me give that to them, and that we help each other. And I think that's the relationships people need to be thinking about. It's not one for one what I just explained, but what is the give and take?
That's great. That's great advice. What advice would you give to founders who are seeking investment?
Why are you the person to do it, right? Like what in your life attributed to the idea that you want to pursue this mission? And you got to understand that I deal with deeply capital intensive companies, hard technologies, right? Like I want to feel like there is an emotional connection to this calling. Like what is your vocation and why is this it? And that's something I've said from the day I started to invest in venture. My investors, myself, I know how to make money if I want to just make money, right? Like it's not about anymore. It's like investing in people who are going to evolve and change the world. So if you're doing that and from the core of your being, you're doing that, then why is it that your journey led you to this expedition, right? And then the question I will ask and will be more technical, right? Which is like, how are you doing it? Why are you doing it? And let's get to the nitty gritty. But I think ultimately, founders really need to do two things. They have to really ask themselves why they're doing what they're doing. And then two, they have to ask themselves how they're doing it and show your investor that they're going to do it with or without them.
That's great. Yeah, I think the clarity and how you communicate it is key in those respects. Because I always think about putting yourself in the position of the other person. So if you're there pitching, I obviously work in the startup space. So I have a lot of startups like send me their deck and I say, hey, I'll send it over to VCs for you and stuff like that. But when they almost have a bit of an ego about like, well, no one else is doing this. So right, obviously we'll be that. You're not really sharing any secret sauce. You're not coming across with conviction. You're not being concise. You're not giving anyone a real reason to back you apart from like, it's a cool idea. And I think that that's like such a disconnect, right?
But also, like, you're in the world of recruitment, right? So you understand, like, there's certain initiatives out there where people find a calling, and it's like the last thing you want to do is place a good person in a company where they don't like align. So it's no different for a founder. Ultimately, they're an employee, right? And the idea is like, it's like it's got to be, there's got to be like a fundamental alignment as to why that journey makes sense. And we're in the process of doing a lot of like more like acqui-hire type things. Even on the firm level, it's like, hey, you want to attract, top tier talent. You want to bring really unique people to come and work for you. You got to give them a feeling of vocation within your organization, or there's no alignment.
Yeah, 100%. That EVP, the employee value proposition, is so key, as well as what you're finding. I mean, it's been the trend over the last sort of 8 years or so, but that move to be more aligned with something bigger than you. People aren't just, I guess it's actually a lot like what you're doing. You're not just trying to make money. It's a bigger picture, it's a bigger mission, and people are finding that and looking for that more so with their career path and who they work for and things like that. They want to be part of something that's impactful, something bigger than them, not just a paycheck. If both can align, that's the ideal scenario, right? If they're getting paid well. And
I think they do. And it's funny because, the big assumption is that, like, funds will not make money in deep tech or space tech for a very long time. That's like a constant criticism I hear from my investors, but we happen to be proving that really wrong. And what I think is, like, money is the byproduct of innovation. I think that like truly is the circumstance. And I think we fail to realize that sometimes. So the creativity you need to innovate creates an outcome where, the unit economics or cost of the product is way more efficient, better, whatever, right? And I think having a culture, even internally, that's championing the creativity and innovation, and knowing that you have the infrastructure and years of data as to how to make a company really profitable and really good, right, can marry itself really nicely. And I think what we try to do at Type 1 is kind of marry those two and be like, listen, there's fundamental ways, like there's fundamental boxes you need to check. That's a given. But most of the best founders are going to understand that. So then let's talk about how creatively you're approaching the problem, right? And let's really hone in on that and make sure that we iterate fast to make sure that we don't run into inefficiencies long term.
Makes sense. Well, look, before we wrap, I know you brought up we're talking about teams and the recruiting aspect. From your vantage point, can you discuss the importance of having a solid team in place and how that's important for like the success of a startup?
Oh, I mean, that's this better than anybody, but that's like the most important part. I mean, like, no one is going to champion. I mean, listen, in deep tech, one of the criticisms we get on the investment side is like, how technical are you guys? I was like, guys, I could bring on, a triple PhD in 3 disciplines of engineering on my advisory board and make sure that he looks and technically does that. That's not what we need. We need technical curation. We need to find someone that can look at the different technologies and understand who we need to validate X, Y, Z. It's the same thing in a company. Like, what makes Elon so special is his team curation, right? He builds really incredible teams, right? That's the only way you as a founder could build out 5 different companies and do it at like hyper scale the way that he's done it. And so I think for founders, it's really important that your team curation is like the absolute most important part of building a business. And the first challenge is going to be convincing people in a nimble, resource light, company to believe in the vision and the vocation. And then the second thing is keeping them, because once you start to make really exciting, innovations, then your competitor, your incumbents, the hyperscalers, everyone wants a piece of the info, right? They want to see how you did it. So your 2 biggest challenges are going to be starting to build your team and keeping the best team. And so what you guys do is so important to that, because and I think that's a message that they should understand right off the bat. It's like, that's going to be some of your biggest challenges. And as CEO, like the world changes over time. For a good amount of it, it's trying to figure out who you're going to give a seat at the table to, and who's going to accept the seat, more importantly.
Yeah, I'm glad you said that. Thank you. It's something that it's a repetitive question that I do ask, but I like to get people's perspective on it. And obviously I'm biased coming from the recruiting space, but it's tough. It's tough at the early stage to convince people that are experienced, that are smart, that have options to join your mission, right? Whether, especially at the early stage, if they're taking a cut, if they're relocating, if they're hedging their bets on what you're doing, and they've got other people headhunting them, they've got other things coming their way. So it's tough, but it's crucial because solid talent is going to attract solid talent. But hiring is one part, like you mentioned, it's retaining them after that. And it's key. I believe hiring and retaining talent is key to your success. So again, I'm biased, but I like to hear it from other people.
No, and we essentially are a venture capital fund, but we're also a startup in ourselves, right? We've only been around for a couple of years. We're growing incredibly fast. And if it wasn't for our team and their ability to take their prior experience and implement it here and get creative on how we do things, like, I don't think we would grow as fast as we are. And it's one thing for Tarek, myself, Sanjeev to have a vision here. It's the other thing to have the team that, could tone it down sometimes and really focus on like what's pragmatic about it. So it's cool to see how it's just such a fun process. So I think founders, I think it's one of the most important things to be thankful. Yeah.
Good stuff. Well, look, Abdo, thank you so much for joining us today, sharing your insights, your experience, and all of the advice that you've given everyone. Where can our listeners find out more about Type 1 Ventures and yourself and follow along with your progress?
Yeah, listen, I'm horrible at social media. I'm not that partner. So what you should do is follow my partner, Tarek, who's way better at social media. It's Tarek Wackett on Twitter, X. And then definitely our website, Type 1 Ventures, type1.vc, a great place to start to learn us. And if your listeners are in LA, come by our offices. We have an open door policy here. So just come by our offices in Malibu, come hang out, see what we're up to. And it's really fun. That invitation goes to you as well, Greg. You know that.
Yeah, I'll be up there soon. Well, thanks again. Yeah, I look forward to keeping in touch and seeing all the exciting companies that you guys invest in.
Yeah, man. And I'm excited to keep listening to a podcast. It's awesome. Thanks
for having me. Appreciate that.
Appreciate it.
Thank you.